I hope you found that useful, and thanks very much for joining today. We have a number of questions which we're going to try and answer as quickly as possible. Our panelists have very kindly agreed to hang on a little longer to address as many as they can, and so hopefully the participants on the webinar will be able to stick around and get those answers. I'm going to move first of all to the supply chain questions. So I'm going to ask Clive to just quickly address those. So there was a question around who you can talk to, and I think Clive's last slide there hopefully gave you an answer to that question. There's another question around CBAM, which we hope to cover off at the same time. And then there's a final question about how supply chain and subcontract machining and fabricating industry in Northern Ireland remain competitive with these measures. So if I pass you over to Clive to answer those, and then I'll move on there.
All right. Thank you, Alistair. I think in terms of the first one around how our team can, you talked about where can you get some help to review your supply chain. Certainly speak to our team. There's the links on the previous slide. I know the information is going to be sent out, so we can certainly help you to start to look at what your supply chain looks like. If you're an Invest NI client, reach out through your client executive, or say follow the links that's there. Specifically on the CBAM that Alistair was alluding to there, there's a lot of really good information available on NI Business Info, and if you type in CBAM that, you can find some good data that's in around that. The other question, I guess, that was around then is how can the NI supply chain and subsea machining remain competitive with these measures? So certainly, I think as we've heard this morning, the measures have the potential to add cost. It's really about clearly understanding the implications for your business, and hopefully, some of that's been explained this morning. But when we get into the detail on that side, it's about assessing the risks in your business, reviewing your existing supply chain design, and looking to identify opportunities for improvement or vulnerabilities in the supply chain, as I mentioned. It's also about working very closely with your supply base and your logistics providers and really looking at that sort of total cost element. I think outside of that, I think we need businesses to obviously build resilience and be competitive, and that's about looking across your value chain for supply chain productivity improvement opportunities as well. And certainly that's something where we can help with from a supply chain resilience team. So again, feel free to reach out and we can take you through more detail around that side. Okay.
Thanks very much, Clive. Jonathan, I'll pass over to you now. There are a number of questions. We've tried to group these as best we can. So there's questions around sources of steel supply. There's questions around how you identify tariff rate quotas. There's questions around potential impacts, and there's some questions around offsetting costs. So if I could ask Jonathan to just quickly maybe look at the sources of steel supply first of all. So a couple of questions around that. Does NI fall under EU tariffs and quotas for steel if you're importing from Portugal? We've got questions around material rolled in India, but melt and poured in India, but rolled in the UK. And what origin that would be. We've got questions around steel coming in from China. What are the implications and repercussions of those? And we've also got other questions around whether you declare an NI quota when clearing a shipment on TSS, when you're buying in from the UK, questions about duty reimbursement if you're only bringing stuff into Northern Ireland and selling it in Northern Ireland. And we've several questions on rest of the world movements. So perhaps, Jonathan, if I could ask you to try and cover those off initially, that would be very helpful.
Thank you, Alistair. Well, folks, I think that today's webinar will be very overwhelming if you consider it, in terms of everything that's been covered over the last hour and a half. So we need to take a step back and kind of reflect and get a better understanding of everything that's going on for your own business. So in terms of that first question, does NI fall under the EU tariffs and quota for steel and we import from Portugal? So that was covered out in scenario 1 of my 5 scenarios today that we looked at. And essentially what that means is that you're bringing it from Portugal. It's already in free circulation in the European Union, either due to the fact that it originated in Portugal or it was already declared into free circulation and went through the EU measures when it entered Portugal. And then when it comes to you in Northern Ireland, working on the assumption that it hasn't left the European Union single market en route to Northern Ireland, i.e. it didn't go into the GB land bridge or anything like that, there will be no further requirements to go through in terms of no import declaration and no quota checks. And that's the same. I know that we had another question around, I think, Spanish origin steel as well. The question around, we buy steel products from a UK-based business which are manufactured in China. Please advise of repercussions with that. We're into a scenario 4 in terms of this is being cleared into the UK under UK steel measures when it entered the United Kingdom, Great Britain's internal market. It is now moving from GB into NI. It is deemed as at risk if it has trade remedies, safeguard tariffs attached to it, i.e. tariff rate quotas. And we then have to do those checks and see if there is country specific or if there is global tariff, and you're checking that via the tariff database, the EU tariff database, which will tell you the quota available, and you're checking that at the point of movement, not at the point of order. So always good to be checking at the point of order what quota is available, but and what historically has been, what's happened with quota. Has it lasted? Has it ran out, at a point within the quarter? And obviously that's going to be impacted even further from the 1st of July because we are operating under these reduced EU steel measures. I think I've got a figure here of we're working on the basis of about I want to say 18.3 million tons. So tariff-free steel import volumes are set at 18.3 million tons, and then we have the 50% duty on out of quota thereafter. The second part around the China element of it, I mentioned today again, we have to consider things like anti-dumping duty. We look at what was discussed in my presentation. Just because it's coming in from the UK does not change the origin. So if it is Chinese origin, you're checking to see with regards to is there any further trade remedies attached to that, such as anti-dumping duty. And then we had a number of questions around melt and pour, and that is EU legislation. It's EU melt and pour is out for consultation at the moment. That consultation runs until the 2nd of July. The adoption plan, as we see it at the moment, is that adoption by the end of August, with an intention that it would come into operation in October 2026. So you have to keep an eye on that. So you've got two different elements to consider there with regards to the movement in. I know a question was asked about will material rolled by a specific importer, but melt and poured in India be classified as UK or India origin? Again, that will fall under that question that we've talked about before. Will there be enough quota to go around? We don't know. As I've said at the end of my presentation today, we just have to monitor this. We have to see what happens. We have to look at how the UK and the EU interact. We know that industry, we know that different trade bodies, especially in the UK at the moment, are very concerned about scarcity of supply and so forth within that the UK side of it. But we have to see what happens all across it. with regards to the EU quota as well. But the takeaway, I would say, Alistair, again for Northern Ireland importers is know your route, know your origin. Because as we've seen in those different scenarios that I highlighted through my presentation, that impacts how you will interact with EU measures in the main and then UK measures. And the UK measures, you're impacting on those directly only when you're bringing in rest of world to NI, and in that basis, you are having to check both UK quota, if applicable, and EU quota. I say if applicable because it impacts 20 categories. UK measures impact 20 odd categories, whilst EU measures impact 27 odd. And we've had this in the past where there was EU quota applicable to rest of world to NI, but no corresponding UK quota. So you need to consider that. Look at all the scenarios that you're trading under. I believe that the PDF, or I believe that this is going to be going up on the Invest NI YouTube channel afterwards, and maybe if PDFs could be supplied as well, give people opportunities to kind of consider each scenario and which one or which ones are relevant to them.
Thank you, Jonathan. We have a question at the bottom on EUDR. That's a complicated one. At the moment, we're awaiting clarity on that. We are who the designated authority for Northern Ireland is, but we suspect that under the Windsor Framework it will kick in from December 2026, but we don't have absolute certainty or clarity on it at the moment. So I would say keep an eye on our website, keep an eye on NI Business Info, and information will be posted as soon as possible on that particular issue. We have a couple of other questions, Jonathan, on where you reclaim EU safeguarding paid on the imported goods when they're sold into GB. Where goods are at risk, do you have to pay duty twice? Do you pay the UK duty and the EU duty on import into Northern Ireland? And we have some other questions around offsetting of costs. So can you advise if the use of inward processing relief and discharge via Article 324C is applicable? And also, will this affect de minimis offset rules? So perhaps if possible, if you could quickly address those, that would be great.
Yeah, so we've got, very specific questions, and clearly I can't give anything definitive in terms of guidance without commodity code processing details, movement routes, all of those different elements. But first of all, they simpler questions as such, Alistair. In terms of how you claim back duty that you paid, just to be clear, the questions came up there on that risk before I address that one. If the steel is coming in to Northern Ireland, has got trade remedies, safeguarding tariffs attached to it, it is deemed at risk under the Northern Ireland Protocol Windsor Framework arrangements automatically. You only pay that current 25%, rising to 50% EU tariff if there is no quota available. So if the quota is available, if you're bringing it in from Great Britain, for example, and you're bringing it in via, you're using TSS to clear it, you're completing your import declaration, you're declaring, as somebody has said in the questions, NICO, and you're putting the country-specific order number if that quota is available. You're checking that quota on the EU database, and you can also check it through the UK tariff schedule. It has quota checks specific for Northern Ireland companies. It is EU quota that we're dealing with there. In rest of world, where you're bringing it in directly from rest of world into Northern Ireland, this is where you are impacted or potentially could be impacted by UK quota and EU quota. So you're checking, is there UK quota available? If there is UK quota available at the time of import, you are not going to be hit by the UK out of quota tariff of 50%, currently 25%. And if then you are checking the EU quota, and where you check the EU quota, if that is also open and available, you are not going to be hit by the EU quota. Now, where you have paid quota, sorry, you have paid out of quota tariffs in terms of that EU 50% for product that you brought in from GB to NI or rest of world to NI, where it was the EU quota that you were hit by. You can look at claiming that back through your duty reimbursement scheme. That means going and presenting evidence through the duty reimbursement scheme to HMRC that those goods did not enter the EU single market. And we have to be very aware that there is additional evidence requirements when you trade B2B, business to business, because you are not responsible for the end sale of that product and the consumer use. So be aware of your responsibilities. But as I mentioned in my presentation today, there has been some positive updates over the last number of weeks. On the 26th of May, there was an update around the introduction of a new replenishment scheme. That's where somebody has used their waiver to waive the associated duty on at-risk goods, i.e. where they've utilised their 300,000 euros allowance, which covers a rolling 36-month period. And then they subsequently have been able to provide evidence that those goods did not enter the EU single market, and therefore now, for the first time ever, they will be able to replenish, i.e. get that money back into the waiver. And the other benefit for manufacturing companies was that there was a simplification around the materials that you were declaring or trying to get a reimbursement from. So substitute materials where you cannot give specific details about the materials that went into your final product. So I would encourage people to look at all of those things. In terms of inward processing relief, Alistair, it's as I said, inward processing relief, customs warehousing, all of these things have advantages and opportunities, but it depends again on the route you're bringing the product in, where your markets are, who you're selling to, because then that will, you are suspending the duty at the point of import, and then you are paying the appropriate duty at the point of where it's released and sold into these different markets. So inward processing relief is an option, but you need to be aware of it. In terms of the offset rules, I'm presuming when the people spoke about or the question came up around offset rules, that we were looking specifically at previous steel safeguard quota offset arrangements rather than Northern Ireland Customs Duty waiver scheme. And in that one, I would say, don't assume that historic quota offset arrangements will continue to be automatically available under the new regime. So review the rules applicable to the specific product category and movement concern. But be aware that relates to UK steel safeguard quota offset arrangements. So you're only really going to interact with that on those rest of world to NI movements where it is UK quota that you're dealing with. And we could get into final use, end use, and category 1 and all of these different things. One thing I would point out that I didn't cover in my presentation, Alistair, was that there has been an update the last couple of days, weeks, at around the 2nd of June, I think that it was updated, the guidance was updated on HMRC, but the update related to there's a transitional exemption that applies in terms of UK quota. If the goods were contracted before the 14th of March 2026 and then are imported between the 1st of July 2026 and 30th of September 2026, goods using that exemption do not count towards UK Q1 quota allocations. And DBT also confirmed that unused quota volumes can carry over within the same quota year, but carryover duty does not apply to those Category 1 authorised use products. But again, they relate to UK quota. We are dealing with UK quota, UK quota and UK steel measures, and EU quota and EU steel measures. So I would encourage people to take time and consider the scenarios 1 to 5 that I have outlined within my presentation and see which ones relate to them, which one or which number of scenarios relate to them.
Thanks very much, Jonathan. We've just 2 final questions to finish up. Now, they're maybe a bit specific to give a detailed answer to, I don't know, but I'll pass them on anyway. So there's a question about welded steel subassemblies and how those would be treated after the 1st of July. And there's a second question around import panels and enclosures that contain steel, but not a large amount of raw steel. And do they still have to report that amount of steel as part of the quota?
Yeah, so again, we have to look at commodity code. Commodity codes will dictate, commodity codes and country of origin dictate what measures apply to them. So when you do a commodity code check using the Northern Ireland online tariff schedule or the EU from HMRC or the EU tariff database, it will tell you what measures apply specifically with relation to those products. You're looking to see if safeguard tariffs, such as tariff rate quotas, apply. And if they apply, then you're having to check if there's quota available at the point of import, and that is EU quota we're looking at. But if it is a finished product that they're importing, that has the product commodity code has changed during processing and manufacture, I suspect it is unlikely that it's going to be impacted by these tariff rate quotas. Now, the CBAM thing is different, and today's webinar wasn't around CBAM, but when we look at CBAM, I am recommending my clients now under those CBAM legislation in the EU because it doesn't impact us directly, and we will be impacted by the UK CBAM rules when they come in, later this year to start of next year. But you may find increasingly, as I said in my webinar, that you're getting asked for information from your EU customers, such as things like mills certificates and so forth. I have been providing my clients with questionnaires to put out to their suppliers to prepare for these type of questions. But in terms of those import panels, you're checking the commodity code, you're checking the country of origin to see if tariff rate quotas are applicable. That risk test where they do not have safeguard tariffs or other trade remedies attached, which means that they are standard goods rather than category 1 goods, you must check that at risk test yourself. I keep saying this in all of these webinars that I do with yourselves and InvestNI and elsewhere. At no point have HMRC told you your goods are not at risk. HMRC, you have a trusted trader scheme. You are self-certain that your goods are not at risk, and you are responsible for holding evidence for a period of 5 years thereafter to confirm that those goods are not at risk. If you are a manufacturer operating under exemptions, be aware that that exemption will not apply in terms of being able to declare goods as UKIM if they are category 1 goods, but it may assist you if you're making a reimbursement claim under the duty reimbursement scheme thereafter. But be very aware and check if your goods are at risk or not, especially when you're dealing B2B. There is an increasing amount of HMRC compliance reviews taking place around UKIMs and around companies declaring goods as not at risk. and they are being found that their goods are at risk and they have consequences as a result.
Okay, look, thank you very much. Thank you to both of our panelists and speakers today, and to everyone who's been online. And I hope you found the webinar useful, and the Q&A, if you've been able to stick around for that, has answered some of the burning questions that you have around this issue. But I'm going to close the webinar there and just say thanks again to everyone for participating. Thank you.
Thank you, everyone. All the best.